if silver crashes all the way down to 50, the silver miners will still be printing money, like literally pulling money out of the ground, real money. So I don't think that would be a disaster at all. I think to the degree that something like that put the silver stocks on sale, again, that would be an opportunity. And what might make that happen? If it's true that, demand out of India is, and front running of tariffs and critical minerals rebalancing, this sort of thing has put a squeeze on the physical markets, I think that rebalances. Again, I'm not a bear here. I'm not arguing against silver, but I think that would be a good thing. That would set the stage again for consolidation before moving higher. And if that's not what happens, if we're really at that blow off top, the good news is, okay, everything will go higher. The bad news is that whenever it, peaks, that we're likely then to go into bear mode for some time. So yeah, again, Mr. Market doesn't care what I want. I would prefer it wasn't the blow off top just yet. But if it is, if we start seeing things going parabolic again and gold confirms silver's move, then actually I would deploy more cash. As crazy as it sounds to say, yeah, I'm going to jump on all-time highs. If we're looking at that blow off top, then yes, I would put more money to work trying to profit on that. And I mean in the stocks. Bullion, I always buy on the dips. That's my savings. I'm always willing to accumulate bullion. That's not what I'm talking about. I'm talking about speculating for hockey stick gains on the stocks. If people ask me, well, how high can gold go? I always answer, well, how long can governments keep printing money? Where is the end of that process? So if you're not worried about the shorter term fluctuations, and by the way, if you bought the very peak, like if you just had the bad luck to jump on the bandwagon or listen to some evil scum of the earth newsletter writer who says he's going to buy the all-time high, right? If you did that in 2011 and you bought gold at the very top in 2011, you would have more than double your money now. Okay, it took 14 years, but it happened, right? So like if you pull back and look at the big picture, if that's your basis for action, I really don't think you have all that much to worry about. And of course, almost nobody top ticks a market. Most people have done better. And if people had courage of their convictions and they bought the slumps, they bought down in 2015, near the bottom, then they would have made much, much more than just double their money. So, the good news here, I think, is that for hard money advocates, what's going on in the real world out there, and if you're patient, you stay the trades, you buy low, sell high, you can do that repeatedly and make a bunch of money. If you're not in the money-making phase of your life, you're in the wealth preservation phase of your life, then, don't lose the faith, brothers and sisters. Your real money is what it is, and we all know, whatever the Fed may or may not do, those 25 basis points or not, that's not even icing on the cake. That's just superfluous almost. Small-time noise.
And you're calling for copper to be really your favorite play in 2026. Can you expand on this?
Yes. When I make that call, people ask, what do you like best? What's your favorite bet for the coming year? And it's become sort of a tradition. And I've made it copper again. When I say that, that's not to say I think that's the one that's going to go up the most. I'm looking at, the answer is risk adjusted. It's the one that I have the greatest confidence in, the most solid bet. And it's more specifically, the real question is, Lobo, where are you going to deploy your money? I was already long gold and silver, so I didn't miss out on this year, but I was looking to deploy more into copper, and I did some, but I've been waiting for a buying opportunity. I do think there's still some Trump shop to go here, and there's still a chance of a buying opportunity. But if not, my outlook on copper remains so bullish for so long, I'll just add more copper to my portfolio. So the answer to your question is, like, if we get the blow off top soon and gold and silver go into reverse, they're not going to have a great 2026. If we are building that plateau, if this is the next shoulder before the next head in the chart, then gold and silver will both outperform copper. I have no doubt about that. But that's an if statement, not a when statement, right? A Rick Ruleism, never confuse, if and when. So whereas copper, I see that more as a when. The pushback here I get is, nobody wants electric cars anymore, so that's going to make copper demand go away. No, it's not. It's Dr. Copper. It's a fundamental industrial metal. And sure, extra demand from EVs it helps copper, but that's not the basis of the speculation here or the market, really. And people say the same thing about AI. Oh, the AI bubble is going to blow up. That's going to be bad for copper. Well, probably short term it would. And that could be the very thing that gives me the buying opportunity that I've been hoping for if that AI bubble bursts. Because it's certainly, and actually this you didn't ask, but this also applies to uranium. Both uranium and copper, and maybe even to some degree silver, have become AI plays, and that could blow up. That doesn't change the overall fundamentals for any of those metals. But if the AI bubble does blow up, it would almost certainly be bad news for anything that's gotten an extra tailwind from that AI play right now. So, all of these things could happen or not, but at the end of the day, you still have to have copper. You're still going to wire houses with it. You're still going to need it to wind motors. You still need it for all the gazillion other things that you need copper for. And that's not going away while the supply remains constrained. So I'm looking at it from, like, as a miner, right? The supply and demand of the market. And so I just have a really high level of confidence in copper going forward, whatever the short-term volatility of the markets does. Whereas, as much as I love gold and silver, if we get that blow off top, things could reverse sharply.
If you've spent any time in these markets, you already know that the world tends to move in cycles that are obvious only in hindsight and invisible to most people right as they unfold. Investors stare at screen prices, cheering tiny green candles, panicking at red ones, and missing the tectonic shifts underneath the surface. And right now, beneath all the noise, something is happening that should make every rational person stop and rethink what they believe about money, metals, and risk. The biggest story isn't that gold has finally awakened from its decade-long slumber, or that silver has broken its old ceilings, or even that copper refuses to obey recession narratives. The real story is that the global financial plumbing is rattling. And when the pipes rattle long enough, something usually bursts. It always amuses me when people ask, "Lobo, do you think this is the blow-off top?" As if markets blow off when nobody owns the asset. A blow-off requires greed, mania, leverage, and widespread belief that prices will go up forever. Nothing in silver today fits that template. The average investor doesn't even know where silver trades. Most can't name one silver miner. They think First Majestic is a tequila brand. Meanwhile, the people who actually are in these markets, they're cautious, skeptical, buying dips, dollar cost averaging, and terrified of looking foolish. That is not the psychology of a top. That is the psychology of early innings. And early innings can be volatile, exciting, violent, and extremely profitable if you understand what's happening. One of my favorite signals of how disconnected mainstream finance is came from a Bloomberg segment last week. The anchor said, with a straight face, "Silver is rallying because retail traders are seeking a cheaper version of gold." That is the intellectual firepower coordinating trillions of dollars worldwide, as if silver were a budget item at Walmart, as if the metal that underpins solar, electronics, medicine, defense systems, and every AI and EV infrastructure project were nothing more than a thrift store derivative of gold. The misunderstanding is profound, but I can't be too hard on them. People think oil comes from a tap and electricity from a wall socket. Why should they understand silver? Here's what matters far more than narrative confusion. We are seeing massive quantities of silver being pulled out of the system at a rate that isn't compatible with normal industrial or investment flows. India has imported more silver in the past year than the US Mint has consumed in a decade. Mexico's silver exports are drying up as miners hold back material. China is vacuuming up concentrate and ore from anywhere it can, paying premiums that would have been unthinkable 2 years ago. And not just as a strategic reserve footnote, they're openly restricting silver exports while expanding their own refining dominance. When the second largest producer of a metal goes out into the world and buys even more of it, at premiums, it's not speculation, it's strategy. Then you have the futures markets, the polite fiction where institutions pretend that silver is abundant. You don't have to be a conspiracy theorist to see the mismatch. You just have to look at the delivery reports. When tens of millions of ounces stand for delivery in the first 2 days of a contract month, that is not a normal market. When non-delivery months like November see delivery volumes that exceed most major producing nations' annual output, that's not normal either. And when the market halts precisely at the moment of a technical breakout, and only the metals markets halt, while currencies, bonds, and equity futures continue trading, well, I may not own a tinfoil hat, but I do keep aluminum foil in the kitchen. There's a fine distinction between conspiracy and incompetence. But when a system experiences technical difficulties, only when the price of a critical monetary metal is surging through an all-time high monthly close, let's just say the software sure has interesting timing. The exchange blamed a cooling failure. Strangely, only silver and gold caught a cold. Everything else kept dancing. Even the nickel traders were rolling their eyes. And those guys lived through the London nickel apocalypse of 2022, when the LME rewound the tape and said, never mind, those trades don't count.
It's kind of fun when, gold was breaking out and breaking out and breaking out. We had lots of gold headlines, and we talked about how that might bring more generalist investors in. It's sort of fun, but also a little bit scary to see silver headlines on CNBC or Bloomberg. There was a video that went around a couple of days ago about, will silver head higher? And it wasn't silver or gold bugs. It was one of these mainstream media outlets. I forget which one. But the funny thing is it didn't tell us anything new, anything we hadn't heard already about in London of physical and people flying silver around, all that sort of stuff that we've talked about for weeks now. So, but people got all excited and people wanted to know, what do I think about this video and so on? Well, I think they're telling us what we already know. But to answer the question, I think I have two minds on this. On the one hand, I'm long, and despite people calling me Darth Silver and all these things, I own plenty of silver, plenty of silver stocks. I'm very happy to see it long. I've never been a bear, but I have to say I'm not sure I really want to see silver catching up with gold, because even your most diehard silver bulls will tell you that silver lags gold at first in a bull market and then more than catches up at the end. It's not the catching up part I have a problem with. It's the end part I have a problem with. My analysis is not technical. It's fundamental, and I don't see any reason for this bull market to end anytime soon. That's like saying the money printing is going to end soon. It just never happens. That said, the bull markets do end despite the money printing. So what I'm saying is, if silver bulls are saying this is it, silver's finally going to have its day in the sun, it's going to beat gold, be careful what you wish for, because if that's what happens, it means the end of this bull market is nigh.
What do you anticipate if this isn't the end of the bull market within the next few months, maybe year? What do you anticipate for the metals going forward here?
I'm bullish on anything real that governments can't print. I'm particularly bullish on monetary metals, safe haven assets. If you, dear audience, think that the AI valuations in the market are a bubble, if that bubble pops, I think that would create a lot of demand for safe haven assets. As we all know, if the market actually crashes, I'm not just talking, rolling over and politely, slumping down to more reasonable valuations. If there's an actual crash, everything gets whacked, absolutely everything, including gold at first during that initial liquidity crunch, and then it goes soaring. If that happened for anybody who gets it, that could actually be an absolute gift on the part of the market. That sphincter's opening moment, like in 2020 or 2008. I wasn't in the market in 1987, but I understand it was a similar thing, right? The wrong things go on sale, and that is an absolute, the best times you could have bought gold in my career, or during the crash of 2008 and the flash crash of 2020, both of those saw screaming rebounds afterwards. So we might see something like that if the AI bubble bursts. And if not, broadly speaking, I think the writing is on the wall of the inflationary agenda in the United States.
The dangerous thing about moments like this is that everything feels calm until it isn't. The stock market still looks euphoric on the surface. Tech investors still speak as though physics itself has surrendered to their preferred valuations. Crypto traders still believe volatility is a feature, not a warning. And governments, they're still spending money like they ordered it in bulk on Amazon and forgot to cancel the subscription. You know what the Federal Reserve, the Treasury, the European Central Bank, the Bank of Japan all have in common? They talk about soft landings the way teenagers talk about responsible partying. Lots of confidence, little experience, and virtually no chance of sticking the landing. In contrast, metals don't make promises they can't keep. They don't tell you inflation is transitory. They don't insist deficits don't matter. Metals simply reflect reality, and right now reality is shoving central banks toward an uncomfortable truth. Credibility is not renewable. Once you lose it, you don't get it back with a press release or a 25 basis point policy tweak. The credibility fracture is why physical demand is ripping, not investor demand. Investors are still half asleep, but the entities that actually need the metal. This is something most people forget. The majority of silver demand today is industrial. Solar, electronics, automotive systems, medical devices, defense applications. Silver is everywhere. But for decades, industrial consumers never had to fear scarcity. They could just hedge supply through paper markets, comfortable in the belief the metal was always available. That belief has been shattered. And when industrial consumers panic, it dwarfs speculative buying. Investors might fight over a few million ounces. Industry fights over hundreds of millions. That's why the massive deliveries on COMEX matter. Not because COMEX defines value, Shanghai is increasingly dictating physical pricing, but because when the Western futures system hemorrhages metal, it reveals stress that was previously hidden. Normally, a few thousand contracts stand for delivery. This month, tens of thousands did, and that's just in the opening hours. If this were simply speculative interest, you'd see churn, not actual stopping. But people want the metal. They want it out of the warehouse. They want custody, not exposure. And then there's the strangest part. Very few investors are even aware of what's happening. The mainstream financial world is obsessing over AI chip shortages and NVIDIA stock splits, while ignoring the fact that the world's most critical industrial metal is flashing warning lights bright enough to illuminate a small town. Look at India. ETF issuers literally halted silver issuance because they couldn't source enough metal. Not because of demand from locals, but because silver simply wasn't available at size. That would normally lead headlines. Instead, it barely got a footnote on page 17 of the business section. This disconnect between reality and perception is where opportunity is born. Speculators don't get rich by chasing popular narratives. They get rich by identifying when the crowd is wrong, and the crowd is profoundly wrong about silver. The irony here is that if silver were to correct, say from $65 to $50, the miners would still be minting cash. Their margins would be extraordinary. Their valuations would remain absurdly low. And if the correction happened because of a temporary industrial rebalancing or an ETF liquidation, that would be the buying opportunity of the year. Not because the fundamentals change, but because long-term cycles always include sharp swings that shake out weak hands and give strong hands room to accumulate. Let me be clear, I am not hoping for a blow-off top in silver. Blow-offs feel great right up until they evaporate. They distort price discovery, punish late entrants, and leave scars that can take years to heal. What I prefer, though the market doesn't care what I prefer, is consolidation, sideways digestion, building a base before the next leg higher, a correction that scares inexperienced investors out while handing professionals the chance to add exposure. But if we are in a blow-off, and if gold confirms the move with its own vertical acceleration, then yes, even I, the self-proclaimed contrarian in the room, would buy silver stocks at all-time highs. Because when a monetary asset enters a parabolic phase, it doesn't behave according to standard valuation rules. It behaves according to panic, momentum, liquidity shocks, and narrative breakthroughs. And the narrative breakthrough here is already forming. Not that silver is gold's cheaper cousin, but that fiat currencies are failing their credibility exam. Every analyst who tells you gold can't go higher has already been proven wrong several times this decade. And every single time, the arguments are recycled. The Fed will tighten, inflation is under control, the dollar is strong, risk assets are rallying. None of these matter in the long arc of currency debasement. Currencies are not stores of value. They are coupons with expiration dates. The only debate is when the expiration hits. This is where copper enters the picture. and why I've said year after year that copper is my highest confidence call. Not the biggest profit potential that still belongs to silver stocks in a true mania, but the highest conviction. Because copper does not depend on political decisions or speculative narratives. It depends on two things. One, civilization continuing, and two, mining supply lagging demand. Both conditions are as close to guaranteed as anything gets in investing. Even in the best case scenario for global harmony, electrification accelerates, the grid rebuilds, infrastructure expands, data centers multiply, AI, EVs, robotics, all require copper, but even without those trends, everyday life requires copper. The world consumed 26 million tons last year and is on track for structural deficits by 2025. Major copper mines take 12 to 20 years to build, and nobody has been spending enough on exploration. It's not optional. If humanity intends to maintain its current level of technological comfort, we need more copper than we can currently produce. That alone transforms copper from a commodity into a thesis. When people tell me nobody wants EVs anymore, I smile. Even if EV adoption slows, copper demand does not disappear. It merely shifts where the demand comes from. EVs aren't copper's backbone. Civilization is. And last I checked, civilization isn't switching to wicker baskets and ham radios. But here's the tricky part, the AI boom. In the short term, anything that was boosted by the AI narrative could get hit if the bubble pops. And it could pop. Bubbles eventually do. Copper stocks, uranium stocks, even some silver miners have caught an AI tailwind simply because they're tied to electrification. If the AI bubble bursts, copper dips. Uranium dips. Silver miners dip. And that would be the buying opportunity I've been waiting for.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.